in September 2019, a company was supposed to change the world. The IPO had been years in the making. Bankers were ready. The roadshow was scheduled. The valuation, $47 billion. That number made WeWork one of the most valuable startups in American history. More valuable than Ford. More valuable than Marriott. A company that rented desks, worth more than a company that makes cars. The IPO never happened. Within 6 weeks, the CEO was gone. The company was nearly bankrupt, and 4,000 employees were about to lose their jobs. The company was called WeWork, and the man who built it believed, genuinely believed, that he was not running a real estate company. He was saving the world. This is not a story about a bad business. Renting office space and subletting it is a perfectly real business. Thousands of companies do it profitably. This is a story about what happens when a man convinces an entire industry and himself that leasing desks is a spiritual mission and that the rules of accounting simply do not apply to profits. WeWork was founded in 2010 in New York City.
The idea was simple. Lease large office floors, divide them into smaller units, add exposed brick, communal kitchens, and a sense of belonging, and rent them to startups, freelancers, and small companies who couldn't afford, or didn't want, a traditional office. People liked it. The product was real, the spaces were well designed, the community aspect worked. Early growth was genuine. But from the very beginning, the man running it had a different vision. His name was Adam Neumann. To understand WeWork, you have to understand Neumann. He was born in Israel in 1979. His parents divorced when he was 7. He moved frequently. For several years, he lived on a kibbutz,
A communal settlement where everything is shared. Work, meals, purpose. That experience shaped him permanently. He arrived in New York in his mid-20s with almost nothing, a suitcase, an idea, and an absolute refusal to accept limits. What made Neumann extraordinary was not intelligence. There were smarter people, it was not vision. There were better ideas, it was presence. Investors who met him described something close to a physical sensation. He would walk into a room, hold eye contact a few seconds longer than felt comfortable, and by the time he left, you had agreed to something you hadn't planned to agree to. He had the rare gift of making whoever he spoke to feel that they were about to be part of something historic. That gift would take WeWork to $47 billion, and it would destroy it just as completely. Through the early 2000s and 10s, WeWork grew at a speed that made investors nervous. In the best way, new locations every month, new cities, new countries. By 2014, they were valued at $1.5 billion. By 2017, $20 billion. By early 2019, 47. The logic was simple, and it was the same logic that had powered every great tech startup of that decade. Grow first. Worry about profit later. Get big enough, fast enough, and the economics will follow. At WeWork, the economics never followed. Every new location cost millions to build out. Long-term leases, sometimes 15 or 20 years, were signed to secure the space. Then the units were rented to members on short-term, flexible contracts. The mismatch was fundamental. WeWork owed money for decades. Its customers could leave in a month. When the economy was good, this worked. When it stopped being good, it would be catastrophic. But that conversation was for later. In 2017, later arrived in the form of a 12-minute meeting.
Masayoshi Son is one of the most powerful investors in the world. He founded SoftBank, a Japanese conglomerate that had made extraordinary bets, including an early investment in Alibaba that returned almost 3,000 times its value. Son had a theory. He called it the information revolution. The companies that would dominate the next century were being built right now. And the way to win was not to be careful. It was to be biggest. In 2017, Son met Adam Neumann.
The meeting lasted 12 minutes. 12 minutes. Sun committed $4 billion. Later, he would explain his reasoning simply. He said he preferred crazy founders, that the crazier, the better. He believed Neumann had the vision and the madness to change the world. He got exactly what he asked for. The money changed everything. With SoftBank's billions behind it, WeWork didn't need to be profitable. It needed to be everywhere. Neumann's ambitions expanded to match the capital. WeWork would become We Live, a residential concept. We Grow, a school. He spoke publicly about solving the problem of consciousness, about living forever, about becoming the world's first trillionaire. These were not offhand comments. They were part of the pitch. Inside the company, a culture formed around Neumann that resembled something closer to a movement than a corporation. Employees believed. They worked extraordinary hours for below-market salaries, accepting stock options in exchange, options they believed would one day make them wealthy. Neumann encouraged that belief. He threw parties. He gave speeches. He built a mythology around the idea that working at WeWork was not a job. It was a calling. But the numbers told a different story. WeWork was losing money at a scale that was difficult to comprehend. In 2018, they lost $1.93 for every dollar of revenue they brought in. To obscure this, WeWork invented its own financial metric. They called it Community-Adjusted EBITDA. It was a standard profitability measure, with one adjustment. They removed the costs they didn't like: marketing, administrative expenses, design, development. What remained looked like a healthy, growing business. It was not. And in 2019, to raise more money through an IPO, they were required by law to show investors exactly how the business worked. In August 2019, WeWork filed its S-1, the document every company must submit before going public. What investors found was extraordinary. Neumann had personally trademarked the word "we" and then sold that trademark back to WeWork for $5.9 million. His own company paid him for a word. He had borrowed tens of millions from WeWork at near zero interest. He had structured his share class so that each of his votes counted 20 times more than an ordinary investor's. WeWork could not remove him as CEO without his own consent. And if he died, his wife, Rebecca Neumann, had been granted the right to choose his successor. Buried in the financial disclosures, the losses were impossible to ignore. Nearly $2 billion in a single year. The reaction from the financial community was immediate and brutal. Analysts who had never questioned the $47 billion figure suddenly questioned everything. The IPO price was cut, then cut again. Then the IPO was withdrawn entirely. What followed moved fast. SoftBank, which had invested billions and had no clean exit, negotiated a rescue package. As part of the deal, Adam Neumann agreed to step down as CEO. His exit package, $1.7 billion. The man who had nearly destroyed the company, whose decisions had wiped out billions in value and made thousands of stock options worthless, walked away with more money than most people would earn across 1,000 lifetimes. The employees who had believed in the mission were not so fortunate. 2,400 people were laid off within weeks. Their options, the compensation they had accepted in place of salary, were worth nothing. WeWork eventually went public in 2021 through a SPAC, a financial vehicle that requires far less scrutiny than a traditional IPO. The valuation, $9 billion, down from 47. By 2023, the stock had fallen more than 99% from its peak. In November 2023, WeWork filed for bankruptcy. Adam Neumann, by then, had already moved on. He raised $350 million for a new real estate venture. The investors who had lost billions on WeWork participated in the new round. But here's what stays with you. The S-1 was public. Every conflict of interest was disclosed in plain language for anyone who read past the mission statement. The losses were there. The self-dealing was there. the 20-to-1 voting structure, the trademark, all of it. And yet, for years, through all of it, the world's most sophisticated investors kept writing checks. Because Newman didn't just sell office space. He sold a feeling, a story about community and purpose and the future of work, about a generation that wanted their job to mean something, about a world where profit and meaning were the same thing, in an era desperate to believe that business could be both wildly successful and deeply human. That story was almost impossible to resist, which raises a question that goes beyond WeWork. When someone tells you they're not selling you a product, they're giving you a mission, ask yourself who benefits most from your belief. Because in this story, the man who sold the dream left with $1.7 billion, and the people who believed in it were left with nothing.